You are now listening to the Supply Chain Secrets Podcast with Bryan Most and Don Davis.
Hi, everyone. I'm Bryan Most, SVP of Retail Strategy at NYSHEX and former VP of Supply Chain at Walmart.
And I'm Don Davis. I'm the Senior Vice President of Carrier Strategy here at NYSHEX and former executive of Hapag-Lloyd and CMA CGM.
And we're back again with our podcast, Supply Chain Secrets. Don and I want to start out by just saying thank you to our listeners and for the feedback. It's absolutely been incredible. I tell you what, Don, this is actually going to be our 15th podcast together, and I'm not sure either one of us thought that we might even get this far.
Yeah, it's pretty amazing. It's been a fun ride. I've really enjoyed the show, and I think it's been great getting feedback from listeners who have either sent me a DM or just responded on one of our posts. It's been really cool.
You know, we started out the little project just to try and create education and awareness about just the things happening in container shipping, and it's a unique position and perspective that you have from a carrier point of view, I have from a shipper point of view, and I think at the end of the day, we thought maybe if we could just even help one shipper or carrier navigate the challenging times, it might be worth it. But I know you get a lot of feedback. I mean, what do you think's resonating with people?
Well, I think that to provide a carrier perspective, you don't see too many carriers talking in the media. At least I don't see that. I see announcements of services or acquisitions or things like that, and maybe there's some sentences, but I don't think there's a lot of representation of the carrier thought process. And I think it's helpful, at least the feedback I get is that a lot of carriers or people who work for carriers have approached me and said, hey, I really like what you're talking about. I appreciate what you're saying. And it's helpful that you're delivering that message and delivering that carrier perspective. So I think that's really what's resonating is that message from a carrier perspective and to share some of that insight from, the background of being at a carrier for a very long time.
Yeah, no, that's cool. I mean, it's similar what I hear from some of the shippers and the fact that it's hard sometimes to distill all the headlines. I mean, I hear that people are going, through headlines, spending 4 and 5 hours a week trying to distill it down to what matters and then provide a perspective to, their executive team. I mean, more than ever, right? You've got senior executives that are want to be involved in supply chain and want to know what's happening, obviously because of the impacts. And so this ability to communicate to stakeholders is sometimes challenging. And I think, a lot of the shippers have enjoyed our perspectives and the fact that we actually, talk about some solutions. Yes, we'll distill down what the problem is, but we also talk about maybe some practical approaches. And I think most of the shippers I've talked to have just said, hey, we appreciate the practical approach. And it actually gives us some ideas on communicating to internal stakeholders. So, that was pretty exciting to hear.
Yeah, I just don't think there's a lot of participation in this space from, like I said, a shipper and carrier perspective, talking about the container industry. And I think for both of us, it's pretty fun to talk about it. And it's fun to dive in and have these conversations and really start to think about different perspectives. And just, I think, given our background, we have a unique opportunity to share our insights and, give our listeners something to think about.
Well, good. Well, let's try and give them something to think about today. A lot of feedback coming in, Don, on what's happening from a rate and a contracting perspective. So the question I'm getting is, has the 2022 ocean contracting season already begun? And, we may cheat a little bit because we can obviously see deals that are getting done through the New York Shipping Exchange. But also, I know you talk to a lot of carriers, and I certainly talk to shippers about what's happening too. And let's just start there. First and foremost, before has the contracting season started, maybe just what's a carrier thinking? At this point, we're halfway through the year, we're getting ready to approach peak season. Essentially new contracts are only a couple of months behind us in terms of starting. What are you thinking as a carrier right now?
Yeah, I think the first thing as a carrier is just really developing a longer term strategy. We're in uncharted waters. I mean, we're dealing with an environment for the past year that has been very strong. And, we see rate levels that we've never seen before. 5 digits. I never thought I would see a 5-digit rate ever under any circumstances. So now that we're here and it's been happening for a while, the question is, well, how do I start to develop a strategy? And I think the important pieces of that strategy are considering rate levels. If I'm a carrier trade manager, I'm happy with how things have been going, but I also think this isn't going to last forever. So how do I reduce some of that downside risk that rates are going to go back to, a $2,000 or $1,500 rate level? And I don't really see that happening, but how do you avoid and insulate yourself so you're not exposed to that kind of a risk factor? Um, I do think the other thing is you're thinking about your ships and how do I make sure my ships are full? I think the challenge for the carriers is that they deal with these fixed assets, and ships don't get bigger and smaller from week to week. They're generally the same size, and so they know how much capacity they have. I think there's quite a bit of things happening in the market as far as extra loaders, as far as some carriers launching new services. Um, so there's capacity coming into the market. And I know that there's a backlog. One person had said that a possible solution to the current shipping crisis would be to move Christmas. Um, I don't think moving Christmas is going to work, but I think it just gives you a sense of how far back the backlog is. So there's this question around, when are things going to improve? When are things going to get back to some semblance of normal? And this is where a carrier starts to think, like, right now it's really easy to make sure my ship's full. It's not always going to be that way because it historically hasn't always been that way. So I think those things around long-term strategy, how do I protect downside risk? How do I make sure my ships are full are really in front of the carrier's minds today.
Yeah, I mean, as a retailer or a shipper, I promise you, there's sometimes if we could shift Christmas, we would do it too to smooth things out a little bit. But obviously, that's not going to happen. And from a shipper perspective, same thing. I'm kind of thinking short, medium, and long term. I mean, short term, I think you have to accept that market conditions just remain challenging, right? We still see, really strong demand. There have been some minor improvements to congestion, and there has been some capacity injection. Carriers shifting assets from different trades, which has provided some temporary relief for some shippers. But this idea that the backlogs still exist and restocking efforts are probably going to continue through at least quarter one of next year. And I don't think there's a silver bullet, right, from a capacity standpoint that the carriers, have. So, I don't think that's just my opinion. I think it's pretty widely held from experts who have a lot more data, than I do. But when you look at the leading indicators, that seems to be the general consensus. So, again, I'm kind of communicating that internally, again, to my stakeholder group and creating awareness that says for the balance of the year, it's all about securing capacity, right? For quarter 3 and 4, obviously I'm going to my existing carrier partners, the ones that have been performing, and appreciating them and thanking them and ensuring that support will continue. And then, where I've had opportunities or issues from a performance standpoint, I've got to figure out, is that performance going to improve, or is it going to continue to struggle? And what are my alternatives, whether it be with alternative carriers or MBOCCs, even though those options are probably slim. Any kind of premium offering or charter option that may come my way, I think I've got to be ready to move quickly, prioritize merchandise, and take advantage of it, at least between now and the end of the year.
Yeah, I think that's a great point. And I think that the prioritization of what you need to ship is extremely important, because I don't think you can plan on extra space being available. It will come in dribs and drabs that we see extra loaders are announced, new services, but getting access to that, how much available capacity is going to be for me is hard to judge. So I think you have to say, okay, I know I have this much space. It's X. I have to prioritize that space. I'm still going to work my tail off to try and get access to additional capacity. And I know carriers want to provide additional capacity. It's just there isn't much of a charter market available. And even what is available, I mean, a rate level of $150,000 a day is fairly punitive to the carrier, right? And they have to commit to that charter for a certain duration. So it's not an easy environment. So I think that prioritization is really a key component, given that things aren't probably going to change anytime soon.
Well, but then as you start to think about kind of the medium and longer term, as you were talking about earlier, right? As a shipper, then that's where my mind starts to go. So yes, I've got to secure the balance of this year, but I'm already thinking about next year, knowing that it's probably going to be challenging all the way through Chinese New Year of next year. And then right on the heels of that, again, you've kind of got this looming, potential labor, issue on the West Coast, where you could have, again, people being proactive and diverting freight to the Gulf and East Coast. I mean, you can imagine that because of the disruptions that people have felt the last couple of years, they're probably potentially going to overcompensate, right? I mean, they don't want to be the ones that have to, again, go report to their executive team as to why they didn't take proactive measures, to avoid, this situation on the West Coast. I mean, it might even be career suicide to not do anything. But then that creates this problem of saying, if there's going to be this rush to the Gulf and the East Coast, what do I start doing now to maybe even position myself to get access to some of that capacity before others, start to talk to carriers, or even start locking it up now?
Yeah, I think that's such an important point because we've seen what's happened with the port of Yantian shutting down, with the Suez blockage, that we have congestion in the ports. And these are things that have just happened already. Now you talk about a labor issue on the West Coast, and given everything that's already happened this year, it just is problem on top of problem, which just adds to that backlog, adds to capacity issues, adds to container inventory issues. You think about the current environment where the infrastructure is struggling. Carriers are having problems with capacity. Returning empties at the port is very difficult. So there's all these challenges, and it's concerning to think that, wow, there's a potential labor issue looming. So I think you have to think more long term, medium term, and long term. And I think that, to me, the cat's out of the bag a little bit, that you've seen these rate levels just explode, right? Now we're right. I think the SCFI said something like $7,000 is the current rate, and then if you want a guaranteed premium product, it could be another 1 to 5,000 on top of that. So the thing that strikes me is that, well, people can pay that. That some companies apparently can pay these very high rate levels, and you think back to like these $1,500 rate levels that weren't too long ago. And, as a carrier, you'd have to like fight like heck to get someone to sign a contract. There is a new normal that I think it's like, oh, wow, there can still be strength in the market at high rate levels. I think that's certainly top of mind for a carrier. And I think just accepting that there's a new standard of rate level and trying to work with a carrier and say, look, I understand. Hey, you guys want to make money. We can help you make money. We want to move our stuff. So how can we not just be so rate centric? Let's think about what's going to create value for you and what's going to create value for me as a carrier.
Yeah. Well, the idea of kind of the cat being out of the bag. I mean, let's just answer the question. I mean, yeah. I mean, the 2022 and even potentially into 2023 contracting season, has begun. And I think the reason that some of that has begun is because, to your point, for carriers to go out and make strategic investments in whatever capacity was left on the charter market. And to your point, we've seen that some of the daily rates have been astronomical. If you're going to go to a shipper and you're going to offer them that potential capacity, of course, the carrier has to lock it up for multiple years. So guess what? They're probably going to try and cover their investment by getting a commitment from a shipper over multiple years. So I think some of the things we've seen kind of, get through to the press around potential big importers, chartering ships or working with carriers to charter ships over periods of time, those aren't going to be short-term deals. And so this idea of saying that you have, shippers and carriers now committing to long-term deals because of the capacity situation is absolutely happening, right? I mean, we can see it happening through our exchange, longer term deals being committed to, and I think the answer is yes. I mean, most I think shippers will probably think, this fall is probably the time to get ahead of these discussions. Typically, you wouldn't think about, even kicking off your discussions until after the new year. January, February, you release a bid packet, etc. But I think most people, if they're not already talking about it, they will be very shortly talking about those options with their carriers. Would you agree with that?
Yeah, I think it makes complete sense. And this is, those things that you'd asked me originally, what's on, if I'm a carrier, what am I thinking? And this ties into that exactly, that if I can mitigate some of that downside risk, if someone's willing to accept what might be considered an above market rate level compared to years past. I mean, I don't know where those rates end up, but I think, there's plenty of room there to negotiate. But if you're willing to commit something to a carrier today, I think that's really powerful because that's what they want to do. Carriers, believe it or not, like making money. If you look at the past, 15 years prior to the past 12 months, you might not think carriers wanted to make money, but they did. I mean, they tried very hard. It's just the market was very difficult and rate levels were low. And that started to change. And I think that's great. And I think I've said this before, but I'll say it again, that high rates are good for the industry. This industry needs investment. And when carriers are making money, it allows them to do different kinds of things, which are going to help everybody in the supply chain industry. So I do see it as a positive, and I think that absolutely it makes sense to start those discussions now. And really, we talked about being partnerships, shipper of choice, those types of things. And this is the time to really step up, in my view, and talk to a carrier and say, hey, this is what I'm willing to do. I'm starting to think more long term, and I'm not going to squeeze you for $75 or $15 or whatever. I'm willing to commit at a rate level that, hey, that works for you.
Yeah, I think most long-term minded shippers accept the fact that carriers need to make money long term. They need to reinvest in their business. They need to reinvest in technology, etc. Right? I think everybody gets that. I mean, we have this kind of fragile ecosystem that we all have to kind of engage in, because obviously the shippers need the carriers need the shippers, etc. Right? To ultimately serve customers down the line. I think the question is, how do we get back to something that, again, shippers and carriers would consider being reasonable, profitability on the carrier side. Shippers feel like they're still able to move goods at a price that they can be competitive, and offer a high quality good to a customer, at a reasonable shelf price. And I think to your point, we're going to settle into whatever that kind of looks like. And if you can create some kind of an agreement that helps you settle into kind of what that looks like while securing capacity and service, I think that's got to be something you think about. I was talking about kind of the process you used to go through about, doing a bid and all those things. Again, it might be a bit controversial to say, but I'm not sure a bid is even going to make sense again, going into this year. I mean, with potentially, market levels being set, so to speak, right, with some of these early deals and other things that are getting done, and carriers still probably being able to dictate a degree of here's how much capacity or MQC I'm going to give you. I don't know. I mean, obviously you have to talk about rate levels and port pairs and, allocations and awards, but that whole traditional bid process, I think people might just quickly speed past that and say, hey, let's kind of talk about a deal between me and you, and let's figure that out now.
Yeah, it's a little hard to imagine that things are going to change so significantly where if somebody wanted to move away from a carrier to somebody else, that carrier is going to be able to take on that business without something else changing. And what I mean by something else changing is either one of their existing shippers is going to go away, or they have the space and capacity available to somebody. And I don't think that's likely. I think that things are going to remain to be tight. And so if you look at it from a perspective that I'm going to have to work with my existing carrier base, then I have to start to think about, well, who might be willing to develop these kinds of partnerships and who might be willing to think more long term. Because I would say from a carrier standpoint, and if I was still at a carrier today, I'd be recommending that we start to segment our business and say, okay, what business is going to be short term There's always going to be a short-term market out there. That's fine. But I want to diversify and have some more long-term deals. And I want to look for customers that are willing to do that. So I'm not just sitting here and being exposed to what's going on in the spot market, because again, that downside risk that I mentioned earlier, I think that's prevalent. And one day that will happen. What day that will be, nobody really knows. But in order to avoid that, the bottom falls out from underneath someone, you want to start to think more long term and strategic. And so my sense is carriers are thinking that way. So if I'm a shipper, I'm just looking at my carrier base thinking, who's willing to do this? Who's willing to walk with me on this?
Yeah. Well, and here's the good news. I think shippers are starting to think that way as well, right? I start to have discussions with shippers who are considering, these types of things, and the way they're looking at it is, hey, look, I know rate levels are elevated. It scares me to think about locking into rate levels at this point for the next couple of years. But I think there's ways to kind of deal with that, right? I mean, one, I don't think anyone would ever advocate you put 100% of your business over locked up over the next, 2 to 3 years. But there's probably a portion, again, of your portfolio that you want to bring and restore kind of confidence and stability to. You think about all of the disruption that has happened. Probably internal stakeholders may have lost confidence in the supply chain's ability to deliver. And this might be your chance to say, hey, there's a portion of my business that's really important or moves the majority of my business that I just want to go out and secure over the course of the next couple of years, knowing that maybe I pay a premium for that. I don't know, right? Nobody knows whether it ends up being a good deal or a bad deal, but I do think that carriers understand that this is a concern for shippers. And so this is where some kind of mutually agreed upon adjustment mechanism or something over the course of time probably makes sense. It keeps rates within a guardrail. It keeps kind of the bottom from falling out, and it keeps the ceiling from even getting higher, and it protects you over that period of time. And I think for a portion of your business, I think shippers are willing to engage in those discussions.
Yeah, I think that there's been some thought around these indexes, which can help guide and make it fair so no one feels like they're making a bad deal. I mean, you could debate the effectiveness of some of the indices that are out there. And, I think there's plenty of different opinions out there. But I think to have some guardrails, because I think whenever somebody makes a bad deal with somebody and they're kind of locked in, the likelihood that they're going to make another deal with that person is low. I think if in your life, if there was any, like, I got robbed on a car and they charged me too much money, I find out later, am I going to go back to that car dealer or that brand and say, do it to me again? I don't think so. So I think there's this behavior that if you do make a bad deal, that it's just not going to work in the long term. So I think having that option to have an index or some sort of indicator, or making it fair and mutual, is something where it gives both parties comfort and is more of a longer term play than just thinking, being opportunistic and thinking about the short term and trying to extend that on for years and years.
But this is where as a shipper, I mean, it's hard to take off, kind of that immediate transactional execution mindset, because a lot of us are built that way over to deliver over the next quarter, the next, 6 months. But this is where you really got to think long term. And again, look at these indicators, listen to smart people in the industry, look at the data, and try and make, kind of this, known versus unknown decision that says, what's the likelihood that I do make a bad deal? What's the likelihood that the bottom falls out of this market? And over, say, the next 2 to 3 years, I think we've already said, and most people have said, for the next 12 to 18, maybe even 24 months, I'm not sure the situation changes dramatically from where we are today. Barring some unforeseen, significant, kind of structural, thing that happens, like, what happened with COVID. And it's not to say that it couldn't happen again, but I think when, again, you start placing, percentages or likelihoods, that's hopefully, low. So then you kind of got the third year that you're kind of worried about. Actually, this is when the ship orders start to maybe come in. Maybe you've got capacity, but I don't know if anybody believes that even when that happens, that the carriers are going to let the bottom fall out of this market. I think they've proven, right, that they can effectively, manage their capacity through blank sailings and other things. that I think that they have the ability to keep these rate levels at a point, to your point, that are profitable. They're probably not as elevated as today, but going back to the $1,500 rates, I'm just not sure is reasonable. So my risk as a shipper, maybe in the latter half of the deal, is potentially there, but I think the risk is low. I just don't think carriers allow it to go back to where it was.
I I do think that there's some people out there that think there is a version of that, let's call it the old normal, is going to happen again. And I would disagree with that. I don't, I totally agree with what you're saying, but I think there's some people out there, but I guess that'll play itself out and we'll see. But I don't really have the sense that that's happening. I think we're entering into a new normal. But I also think that there's one thing we can learn from, let's say, the U.S. flag business, the military business, and I handled that business for a while. And really cool segment, by the way. I thought it was really awesome working with the military and the government. But one thing you learn is that that they're highly prioritized. And why are they highly prioritized? Because the government pays a lot of money to ship their stuff, but they also have this priority that they get. And if the military shows up, then everything else would roll because on the one hand, it's important cargo. There's an agreement, but on the other, they're paying for that. And so if I make, let's say, what I consider to be a bad deal, I sign at $10,000 or something for 3 years. If I do that, then I might feel bad that I signed this high rate. But I would expect that if rates start to fall, if I'm paying an above market rate, that the carrier is going to want to service my business and they're going to prioritize what I'm doing. So even if the market changes, what's the value in me being prioritized? And guess what? When something bad happens, there's a peak season, there's a change in the supply chain that causes this disruption that absorbs capacity or container availability. If I'm a carrier, I'm going to prioritize and optimize based on who's paying what rate level. And if I have somebody that's a partner with me and willing to commit, again, do I think it's $10,000? No, but I just use that as an example. I think you're going to get prioritized and you're going to get a better level of service. And is it worth it to you not to worry about this risk where you're going to get, rolled or not prioritized? It's a question of what the value is for the shipper.
I love that point that you just made. Only because when I talk about all of that risk that we just discussed, and I'm really compartmentalizing the risk in the back half of a long term deal. I would much rather, to your point, have the predictability and reliability that I've been lacking. Because again, one, I've got to rebuild confidence internally with my stakeholders that the supply chain has the ability to deliver. Two, I've got to give some landed cost assurity to my merchants and my buyers. I mean, guess what? People are traveling again. There's going to be a time, and it could be late this fall, when buyers and merchants are traveling the world again, going back to Asia, going to Europe, going to South America, Latin America, and they're going to want to be making purchases, and they're going to want to know what is not only my cost for the next 12 months, but what is it for the next couple of years? Because I might even want to go make a significant investment in one of my suppliers, right? Or a particular range or a product in the store that I want to build on the momentum that we learned through kind of the COVID rebound. And I've just, as a shipper, I haven't been able to give, either one of those to my internal customers to, again, allow us to support our end customer. So I love that point you're making, because even if there's some some risk on the downside, the return I think you get from predictability and reliability, especially if you go into these long-term deals with these committed components that you and I talk about that are performance-based, because I'm not sure I'd sign a long-term deal without kind of both parties having some skin in the game. To me, that benefit far outweighs the risk, and I think that's an incredible way to think about it if you're a shipper.
Yeah, and I think again, some of those things that we've talked about in our shows, we talk about partnerships, being customer of choice, and I think this is how you do that, and really showing a carrier that like, hey, I'm in this for the long haul. I value service. That this is the value proposition for me is service delivery. It's not price. And there's some companies which are based on price and they're going to be opportunistic and they're going to chase rates, and that's fine. You can do that. But I think just by demonstrating the ability and the willingness to say, I'm willing to commit to you, I need you to prioritize my stuff. I need to get these things where they need to go. sure, some things may happen, but I need to be treated with some degree of priority and I need to make sure you're committed. I think that's demonstrating that. And I also think by having some assurances and having, contracts with teeth and having some mechanism to monitor performance is also like a huge value add in that game. But I think committing for the long haul, again, at a higher rate, there's not much downside risk provided you can withstand that. I think one of the worst things you can do is take a long-term deal at a below market rate because people are going to be looking at that. There's such a bullseye on that customer's back because they're the lowest paying guy on the ship. Nobody likes that. And how do you give a high level of service at the lowest possible rate? That just doesn't work in any industry. So by committing for the long term and doing it at a profitable rate level, I think makes a ton of sense.
Yeah, no, I agree with you. And, I just, as a shipper, the one thing I think that has come out of the last 12 to 18 months again is this reprioritization on not just the ocean cost, but kind of this end-to-end supply chain cost. So taking this broader look, because to your point, you might have this great freight rate on the water that gets rolled and gets disrupted, and then it causes a 10x effect downstream in terms of cost that far outweighed the couple $100 that you thought you got on the ocean side. So I think this broader look at end-to-end costs is definitely one thing that has come out that keeps people from focusing in on that last 25 or $100 on the ocean freight rate. So that's one of the good things. And then the other is just, again, this prioritization around predictability and reliability. And it's not to say that it wasn't important before, but I think now seeing the dramatic effects that it can have, if you don't have at least a portion of your supply chain that is somewhat protected, the effects are just dramatic. And so I think those are things that have people thinking differently and longer term. And then the last thing would be from a shipper is at least then you have something you can count on. It's a bit of an insurance policy. So if you have a portion of your business that is locked in over the next 2 to 3 years at a certain rate level, and say they're some of your most important port pairs or some of your highest prized commodities that you're moving from your suppliers, maybe that puts you in a little bit more of a comfortable position when you go talk to your other carriers about what you need or don't need, because at least there's the known piece of what I already have and then what I need or what is left. And, maybe that helps you in some way in future years. But either way, I think there's just a ton of benefits. And, we're already seeing it happen. And I certainly think that we'll see that over the next 6 to 12 months, probably grow in adoption and acceptance. And by nature, because of the way those deals will be structured, I think that creates that ultimate longer term stability that a lot of us have kind of hoped for and said that the industry desperately needs.
Yeah, and I mean, I didn't mean to imply that service delivery wasn't always important. I think just things were different, 3 years ago, that you just had ample capacity. You really could maneuver from one carrier to the other. So for you to get a decent level of service from somebody was fairly easy because the capacity wasn't so tight. But now, given the market situation, I think we all know that it's not as easy as it was a few years ago. So to think more long term and think strategic, and as you say, take an insurance policy. No one's saying do this for 100% of your business, but if you could do it for a portion of your business, and again, where you have priority, what are the origins and destinations that are most important to me? Well, maybe I should do that there because I know I have the density to ship from those locations for the long term. Then let me commit to those locations, and then there's some others that, hey, I can still operate in a 1 year or short term market if you wish, but to de-risk some of it, I think makes absolute sense.
Well, again, it'll be interesting to see what happens. I'm looking forward to it. It'll certainly give us probably future topics and things to discuss. But hey, look, hopefully those perspectives help some of the listeners as they're approaching this part of the year and this early contracting season that again has already begun.
Yeah, and I think for our listeners out there, we're going to continue to follow this and watch this and talk about it. So we'll continue to have guests on our shows. Bryan and I will continue to break things down and share what we're seeing. And I believe it creates a lot of insight. And based on the feedback we've been receiving, it's been really great. So thanks for our listeners. So I think that wraps up another exciting episode of Supply Chain Secrets. I just want to thank our listeners again. And don't forget, like us when you see us on social media, rate us, review us on wherever you find our podcasts, Apple, Spotify, or wherever our podcasts are found. Thanks for listening, everybody.
Thanks for listening to the Supply Chain Secrets podcast. Make sure to subscribe to the podcast on your favorite podcast network.